Welcome to Commercial Real Estate Pro Network's CRE PN Radio. Thanks for joining us. My name is Jay Darren Gross. This is the podcast focused on commercial real estate investment and risk management strategies. Weekly, we have conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Today, my guest is Dave Dubeau. Dave is a real estate entrepreneur, a best-selling author, speaker, and investor attraction expert based in beautiful British Columbia, Canada. And in just a minute, we're going to speak with Dave about how to find investors and raise capital without rejection. But first, a quick reminder, if you like our show, CRE PN Radio, there are a couple things you can do to help. You can like, share, and subscribe. And as always, we would love to hear from you if you leave a comment. Also, if you'd like to see how handsome our guests are, be sure to check out our YouTube channel. You can find us on YouTube at Commercial Real Estate Pro Network. And while you're there, please subscribe. With that, I want to welcome my guest, Dave. Welcome to CRE PN Radio.
Well, thanks very much for having me, Darren. This is great. Now I'm jealous because you've got like the perfect radio voice, my friend. My goodness.
My
own podcast. I'm going, geez, I wish I sounded like this guy. You've got like the perfect announcer voice.
Well, I appreciate that. But the reason we're doing this is to learn about real estate and all the good stuff that from the good guests we have like yourself. And before we get going here, if you could take just a second and share with listeners a little bit about your background.
Perfect. Yeah, Darren. So as you heard, I'm from beautiful British Columbia, Canada. So just a little bit north of where you are, Darren, in Oregon, and been doing the whole real estate thing for quite some time. Kind of grew up in a real estate family. My father and my grandfather built a sixplex. That was the family home as I was growing up. My mother was a very active real estate entrepreneur as I was a young man into my teens. She built up a portfolio of over 50 doors. So it always seemed like we had real estate going on in the family, but I didn't pay that much attention to it. And then after graduating from university, way back in 1990, went and traveled the world, ended up living in San Jose, Costa Rica, started a business down there, lived overseas for almost 14 years, got married, had kids. When they got to school age, decided to bring them back to North America so they'd have a better education, and had to start all over again from scratch. So I was in a brand new city, had been gone so long, I didn't have bad credit, I had zero credit. I'd been self-employed so long, I was pretty much unemployable. And there I had to figure out, okay, what am I going to do to make a living? So Darren, I don't know if you remember those late night infomercials that used to come rolling across the TV about 1 o'clock in the morning. Remember those?
Oh yeah, Carlton Sheets.
Yeah. So I saw one from a gentleman named Ron LeGrand, one of Carlton's cohorts. And he said, hey, you can get into real estate with little or no money down. And I said, hey, that's perfect because that's what I got. So I sent away for the course, got it, dusted it off, got in, dove into all the, I think it was VHS cassettes and binders and all this kind of stuff. And you got to remember, I was up here in British Columbia. All of this stuff was American focused. So I had to kind of Canadianize it, make it work in my market. I did that, did 18 deals in 18 months. And then after doing that, because of my background in marketing and that sort of thing, I caught the eye of an up and coming real estate guru up here, went on board as the director of marketing for him and his companies, helped him grow from 2 employees to 128 employees, 7 branch offices, about $200 million a year in revenues between, training products and investment stuff that they're offering as well. And took some time off from active real estate investing, got back into it, doing rent to own, eventually got out of that. And more recently, since 2013, I focus on partnering up with smart folks who are good at multifamily investing and getting part of that by helping to raise capital for their deals.
Got it. So you've been on all ends of the spectrum of real estate, from I guess hearing it in the family while you're growing up, to the no money down, to working for a larger entity, and now you're raising capital.
Exactly.
Uh, Well, it sounds
That's
like you're qualified to talk about raising capital. That's good.
Well, I've done some myself, that's for sure. But more importantly, I've helped a lot of other people raise cumulatively hundreds and hundreds of millions of dollars for their deals. So, yeah, the process I've come up with has been quite effective, and it's really effective for people who are just getting started with raising capital. They haven't done it before, or they haven't done it very effectively, and they don't like the idea of doing the old school dialing for dollars, which involves massive rejection, or the whole networking and schmoozing and turning every conversation into a real estate conversation and then following up again, dealing with massive rejection. Most what I call mom and pop real estate entrepreneurs aren't geared up that way. I mean, they're doing real estate. They've got some properties in their portfolio. They're still, a lot of them are still working at their jobs. A lot of them are doing this part time. They got families. They got stuff going on. They don't have the time, the energy, or the inclination to develop this whole skill set of becoming a high pressure closer kind of a person. So we offer kind of a different way about going around raising capital, and instead of chasing after investors, let's figure out a way to attract them to us. So that's what the whole idea is.
Let me ask you, because your starting point there with the no money down kind of a property, obviously, that's the no capital. But the reality is, in the larger properties, if you want to really grow your portfolio and get into larger properties, there's a need for capital. Um, so I'm kind of curious. I was just sitting there thinking as you're talking that the strategy from a no money down uh, strategy, a starting point. I'm wondering if there's not some similarities in that you are still there is still something you're looking for, in that potential for that deal to work. Somebody's got to have some money to make that work. Whereas now when you're raising capital, if there's is there a thread, a common thread through there, or
Oh,
am
for
I?
sure. Yeah. I mean, at least for myself, Darren, when I was doing the creative no money down deals, it was all about marketing to attract motivated sellers, people that were in some sort of a wonky situation with their property and they needed to get out of that situation. They weren't looking for top dollar for their property; they're looking for a solution. So that it all revolved around marketing, because those 18 deals that I did in 18 months, and this is a pretty small market I'm in, it was all by doing marketing and attracting these people to me. I never used a realtor. I never searched the MLS. I never cold called a single FISBO seller. It was all by applying marketing and getting these people to come to me. So fast forward, whatever it was, 10 years or more. Yeah, probably more. When I started raising capital, after floundering around and failing miserably and getting, putting up with a ton of rejection, I said, hey, why don't I apply what I already know about marketing to raising capital, and let's attract investors instead of chasing after them. So not quite, very different process, same idea though.
When and I'm also, I guess, another distinguishable difference or something I'm hearing you say is that notion of when somebody's reaching out to you as opposed to you approaching them. Um, I'm wondering if you can speak to that as far as the
Well, I'm sure, Dan, in your background as an insurance professional, you know the difference firsthand between chasing after a prospective client and having a client be referred to you by a current client. It's night and day. Like, you don't have to convince that second person how great you are. Somebody else has already done that, or something else has already done that. So same idea here. I mean, a lot of us, when we first get into raising capital or think about raising capital, what comes to mind is The Wolf of Wall Street, right? That movie, or back in the day, Glengarry Glen Ross, right? Always Be Closing, right? Alec Baldwin, great movies. But that scares the crap out of most people. The idea of having to pick this sucker up and call everybody and try to pitch them on a deal over the phone, especially when you're trying to raise, your listeners are trying to raise hundreds of thousands of dollars, if not millions of dollars, for multifamily properties, right? So that's a daunting task, especially if you've never done it before. And even if you're good at it, you're going to face a ton of rejection. So most people, myself included, and this is how I learned this the hard way, Darren. Here's another big concept, you guys. You want to write stuff down. When it comes to the chicken and the egg, which comes first, the money or the deal? A lot of people think, you know what? Find a good deal and the money will find you. We've all heard that. And excuse me, but I say that's complete BS. That is BS. What you want to do is you want to have the capital and your investors lined up first and then go finding the deals. Because then you can go in, you can negotiate, you know you've got the capital to back you up, and you can go in and you can make offers with confidence, knowing that you're going to be able to close. Versus if you go in, tie up a deal, and then you scramble around to raise capital. If you haven't laid the foundation down, that's a very, very difficult task. So I remember vividly, Darren, my whole experience that got me to focus on this was when I was doing rent home deals. We were doing a strategy called tenant first. So we would actually go find a really good rent own client. We go buy them a house and then we rent own it to them for 2 to 3 years while we help them get qualified for financing. So that's great. And I did the first couple of deals under my own steam. I had enough capital, I had enough home equity. I could come up with down payments, but then I ran out. And of course, that's when the perfect tenant buyer couple landed on my lap. They were absolutely ideal. Ran out, got a property tied up because I heard, hey, find a good deal that the money will find you. Crunched all the numbers, figured everything out, saw that I was going to get my investors a really good return. And then I said, okay, well, I still have to do something, right? The money's not going to magically find me. I need to do something around this. So I'd heard pick up the phone and start dialing for dollars. So I tried that. Rejection, 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 rejection. Now, I admit, I don't think I was very good at it, but even so, it's a tough, tough road. My fragile little ego could only handle so much of that before I said, okay, enough's enough. I quit. And then I thought, okay, well, I also heard turn every conversation into a real estate conversation. Go out there and network, schmooze, talk up a storm, collect cards, give cards, follow up, all that stuff. So I tried that. Local Chamber of Commerce, BNI groups, Toastmasters, whoever had a group of people together and would let me in the door. That's what I went. And I talked up a storm, used my little elevator pitch about real estate and all this stuff. Collected a bunch of cards and stuff and raised zero capital. And I was under a crunch, right? Like I'd raised this money within 2 weeks. I got an extension. And then I came up with what I thought was a brilliant idea. And you're going to scoff at this, Darren, but here's, desperation breeds desperate action. So I thought, hey, this is such a good deal. It's going to sell itself if just enough people see it. So I put together this was years ago, put together a little PDF and emailed that to a couple of hundred people that I knew. And I saw, okay, this is going to work like gangbusters. And this was the first thing I saw any action on, Darren. I started getting some replies back. I thought, oh, good. I was counting the money already, right? Until I started reading these replies. And basically they're saying, Dave, buddy, I haven't heard from you in 5 years, or some cases 10 years. In one case, 18 years, the person hadn't heard from me. And here you are, hit me up for cash for a deal. Take a hike. So the story ended badly, Darren. I had to collapse that deal. I'm in a relatively small city. There's about 80,000 people in town. So I ticked off my tenant buyer big time, ticked off the seller, ticked off the realtor, the mortgage broker, everybody that was involved in this deal, got major egg on my face in a fairly small market. And that's why I said, there's got to be a better way than this. And that's why I give my head a shake and I say, hey, dummy, if there's something that you're pretty good at, it's marketing. So why don't you figure out a way to, attract investors, get investors lined up, ready to go in the wings, and then you can go make offers on deals. So it took a bit of time and effort and trial and error, but I came up with this process.
So let's talk about what was obviously the aha is you need people, you need money, you need capital lined up here.
Yeah.
So let's talk a little bit about that. What is it that you do now or that you teach your prospective clients or your clients to do so that they are prepared with the capital when the opportunity presents itself, that they can pull the trigger and make the deal?
Well, what I do, Darren, is I encourage people to go after the low-hanging fruit. Encourage people to go after the low-hanging fruit. So what does that mean? That means we need to kind of step back and look at things realistically. In order for somebody to invest 50, 75, 100 grand or more with us, they need to know us. they need to like us, and they need to trust us with their money. Would you agree that
No,
those
it's a good
three things?
starting point. Yeah.
Yeah, you need them. You're missing any of those, it's going to be very, very difficult. But most of us, when we're trying this, we think anybody with a pulse and a checkbook that doesn't bounce would make a good investor. And that's very, very dangerous. First of all, from a practical standpoint, if you're trying to raise capital from complete strangers, that's pushing a very big rock up a very steep hill. They don't know you, they don't like you, and they sure as hell don't trust you with their 100 grand. So you have to create that relationship from scratch, and that takes a long time. The other big thing to take into account is that typically it's illegal, right? Unless you and I are licensed to do so. So typically we're thinking about a mortgage broker, a stockbroker, could be a financial planner. These people can receive capital from the general public because they're licensed to do so. You and I, as mom and pop real estate entrepreneurs, we can't unless we got things structured properly, unless we got the right exemptions. And caveat here, you guys, I'm Canadian. I'm from north of the border. So I'm just talking about what I'm aware of in the States. The rules are a little bit different. In Canada, we do have securities regulators, same kind of idea. You guys, for what I understand, you have state regulators, and then you got the Securities and Exchange Commission on top of that. So before you do anything, go talk to an appropriate real estate lawyer in your area that can get you set up properly so that you're compliant. That's my cover my butt thing there. Is that
Disclaimer.
yeah, my
Yeah.
hopefully that worked all right there. So you guys, but basically the big picture is let's focus on people that we have a pre-existing relationship with, right? People who we know and they know us. Because here's the beautiful thing there, Darren. We got 2 out of the 3 things taken care of. They already know us, they already like us. Now we just have to work on, will they trust us with their money? So that's what we suggest. When you're getting started with this, let's come up with a target group of prospective investors. Now I say prospective investors. You don't know who's got the capital, who doesn't have the capital, who's going to be ready, willing, and able, and who isn't. But for most of us as mom and pop real estate entrepreneurs, if you came up with a list of 150 to 200 people that you know and they know you, within that group, and this is what I like to say at my training workshops, everybody, I firmly believe, has at least $1 million of capital sitting here, just waiting to get access. The challenge is we don't know exactly who has the capital and who doesn't. So we need to come up with that target group of about 200 people, and then we need to let them know what we're doing. We need to shake the tree and collect that low-hanging fruit. So the first step is let's come up with that target group of people. And don't filter too much, because one thing I've learned over the years, Darren, I'm sure you've seen this, is don't assume that somebody does or does not have money. Because quite often the people that are all flash ain't got no cash, and the people that are very humble and don't look like they have much money actually do have a lot of money. So don't prejudge people. Does that make sense?
Yep. No, absolutely.
Yeah. So that's coming up with that target group is the first thing. The second big part of this whole thing, Darren, is don't make the stupid mistake I did, which is charging in like a bull in a china shop saying, hey, it's Dave. I got a deal. Have you got any cash? We've shown that doesn't work very well. So there's a better way to do it. And what I like to do is encourage people to do what we call a warm-up campaign. So this is a way for you to break the ice with folks before you start talking business. So we have a very simple 3-step email sequence that we send out to people, or we have our clients send out to their prospective investors, just reconnecting with people on a personal level first, having a little bit of interaction back and forth, and then giving them the heads up that we're going to start marketing to them about what we're up to with real estate investing, and just kind of set the stage before we actually start the marketing. Does that make sense, Darren?
No, so far I'm on board here.
All right. Do you have any questions about this part of the process? This is step 1 of our 5-step process.
No, I just think it makes a whole lot of sense on that where you're starting. You have eliminated those you don't know and starting with those you do. I'm guilty. So often it's so easy to look past those we know because we already know them and we've already qualified them wrongly or rightly. without ever asking, or even letting them know we're doing this.
Mhm.
And I same true. I know in my insurance practice, I would be probably more beneficial to start with those current clients, and look for referrals rather than keep charging it after new ones. But
Yeah, well, we all make that mistake, that's for sure. But again, when it comes to just first getting started with raising capital, I think this is a way to go. And a lot of people are freaked out. They say, well, you know what? I've heard don't mix friendship or don't mix family and business. That's a recipe for disaster. And you're right. It could be a recipe for disaster if you do it the way most people mistakenly do it. And they do it on a spit and a handshake. So here's the recipe. Here's the way to make it work, bringing, even if it's your brother, your sister, your parent, whatever, on board as an investor partner. Here's what I always suggest: treat it as if you're working with a complete stranger. What does that mean? That means if you were working with a stranger, which I don't recommend, but if you were, chances are you'd be using the appropriate legal documentation, right? So do the same thing, even if it's your brother. Have the appropriate joint venture agreement, the appropriate contract, or the appropriate legal structure set up. Again, this is where it's important to talk with your lawyer so you know how to set everything up properly. Make sure they get appropriate independent legal advice. Set everything up so when you are working on a deal that you've got the appropriate reporting and the time frames for all of that. So pretend as if your family member, your best friend from high school or whatever, whoever it is that's your investor, pretend they're a complete stranger and treat it very, very professionally. And that will eliminate all, set the parameters. That will eliminate all of that back and forth, that awkwardness, potential awkwardness of working with somebody that you really know. Now, here's the other thing. People think, well, I don't want to talk with my friends and family about what I'm up to with real estate investing. I think that's the wrong idea. I think, if you're actively investing in real estate, chances are your thought process is, or it should be, that real estate is the absolute best investment choice for everyday people like you, like myself, like our investors. I mean, what other investment class out there is such a solid, tangible investment? What other investment class out there, especially if your listeners are mostly focused on multifamily? There are at least 8 different profit centers that I'm aware of with a multifamily deal. What other investment choice out there offers that kind of potential for average people? So you are doing people a disservice by not letting them know what you're up to with real estate investing. And then the other big mind shift is understanding the value that you bring to the table. Because a lot of us, when we first get started with raising capital, it's all about me, 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 me. What I need this money to grow my portfolio. I need this money to create more passive income for myself and my family. Well, that's cool, but also think about what do you bring to the table for your investor partners, especially if you're doing an equitable kind of profit split with your investors. You are bringing them an opportunity that they cannot or will not do on their own. So instead of kind of coming to the table like a beggar with your hat in your hand looking for a handout, you can, go to the table with some cojones, with a little bit of mojo there, knowing that you are bringing massive value to the equation. So, that's a big challenge I see a lot of new capital raisers making, is they kind of snivel and grovel. They come across as needy. They're kind of desperate. How do I know this? Because that's how I was. Okay, needy and desperate, and that just repels people. My mentor once said, needy is creepy. Very, very true. So needy is creepy. People can just smell that. So you need to step into your position as a real estate professional. You need to understand what you bring to the table, and that it's actually a much better thing than what your investors bring. Everything's necessary, but you're bringing more value to the table than they are. There's trillions of dollars out there looking for a better home. You're providing that better home for them. I'll get
uh,
off
that's
my.
a that's a great point to remember, because I think there are so many people that are resigned to what the stock market, how that works, or the little money that they're getting on whatever they may be doing, as opposed to the opportunity. And I think a lot of this just comes down to a lack of knowledge. They just don't know the opportunities exist, and who would they rather do an opportunity with, somebody they don't know or you they do know and already like and trust. So I think that's a great point. And just keep in mind, I mean, I think really that first or that last point you made about just the value you are bringing, like you said, they have money and they're looking for some sort of a return and a safe return. I think those are great points. Great points.
Well, I think it's our patriotic duty to educate people in our sphere of influence, people who have that relationship with, about what we're up to with real estate investing. Educate them, not manipulate them, not pressure them, not, arm wrestle them into investing with you. Educate them about what you're doing and allow them to make their own educated decision as to whether investing with you makes sense. So my whole process, my whole way of doing things is very, very, no pressure. Right? And it works very, very well. It is kind of counterintuitive to everything that we've seen on TV and in the media about, what it takes to raise capital. I don't think you have to beat people over the head to get them to invest with it. I think you need to provide that education and allow them to make up their own mind, compare and contrast what investing with you in a real estate deal looks like compared to keeping their money in the stock market and mutual funds, in the bank, all that.
Right.
All that kind of stuff.
So let me ask you, can you describe a typical student client of yours and their experience? Um, they're in real estate, they're wanting to raise capital. Can you describe some of the experience some of your clients have had?
Before they start this process or once they start the process?
Yeah, just I guess more of like once they start and how long it's taken and the amount of money they've been able to raise
Oh,
and
yeah, it's all over the place, Darren. So it really depends on what kind of strategy they're doing. So a lot of my clients come on board and they've done maybe one or two deals under their own steam. Maybe it's a single family home, maybe it's a single family home with a basement suite, and they want to do more of those, or they want to start stepping up into multifamily properties. That's kind of it seems to kind of work that way. So they start with single family homes and then they start raising capital. They do a few more of them, and then they realize, onesie twosies are great, but if you can get 8 doors in one property, or 16 doors, or 24 doors, or 54, whatever it is, that's a lot better. So it's usually that kind of a progression. They've hit the wall, they've self-financed their first couple of deals, or maybe they bumbled around and actually raised a little bit of money, but it was the old way and it was painful for them. So they're looking for better ways. And what are the results? You know what? It's all across the board. And we've had people get started just with this first step I was telling you about, which is coming up with that target group of prospective investors and breaking the ice and getting some people putting up their hand and saying, hey, Darren, I didn't know you're doing real estate. I'm interested. Tell me more. And then they have a meeting with them and they show them what they're doing and they get investors right on board right from the get-go. I had one client not that long ago, Bruno, was new to the country. He was from Mexico originally, came to the country, had some experience in Mexico, but none here, not even a big social network here, but went through the process. And his very first presentation, he got an investor on board for $200,000. Now, is that normal? No, that's not normal. That's exceptional, but it does happen. I had another, typically it's more like $80,000 to $100,000. I did have, because the next step of the whole process is make sure that you've got your investor presentation put together. I call this your $1 million presentation. And usually recommend a slide deck. I had one client, I call it the $1 million investor presentation because typically over a period of months, you could probably quite easily raise $1 million using this presentation. But one client of mine, Curtis, he did this process and he had his very first presentation was with his dentist. And the dentist at the end of the whole thing, he loved it, loved what Curtis was doing, loved the presentation. He said, hey man. So Curtis said, okay, so are you interested? He said, yeah, I'd like to invest. And Curtis said, well, how much would you like to invest? Well, he said, you know what? I've got a line of credit that I'm not using right now. It's for $1.3 million. Do you think we could do something with that? And Curtis scratched his head and he said, let me think about it for a sec. Yes, I do think we could do something with that. Bang. So that was the biggest example of the fastest that I've seen. And that's definitely not typical, but it's definitely possible. So it's all across the board, from $50,000 to $1.3 million quite quickly. Typically it takes a bit longer than that to raise the big bucks, but you can start very, very quickly.
No, I think it's all good. I know, the notion you go by yourself, eventually you will run out of capital.
Oh yeah.
And, if you want to continue, you've either got a partner or, I mean, uh, you're going to need more capital. And either you're going to have to sell something and try and, move that around or partner up with somebody else. And I mean, I think that, if you look at the largest deals, the syndications and that they're groups of people. They're not just one guy. And even some of the largest uh, investors I know, they get others to partner with them and join capital in that. So
Well,
it's
they have to, right? Or else you
yeah.
get, right? Even, the biggest guys pool capital, right? It's it's the way it goes. I kind of use this analogy. I say real estate is our vehicle that we've chosen to get to where we want to be financially. So we've chosen real estate as the vehicle. And when it comes to every vehicle needs a driver, you're the driver of your real estate vehicle. Every vehicle needs fuel. And when it comes to our real estate vehicle, we can use our own finances, our own resources. That's kind of like having a little jerry can of gas. You put that in and it gets you started. But sooner or later, you're going to run out of gas. You're going to stall out. You're going to get stuck, right? Now, when you've got access to other people's money, when you've got a group of investors lined up ready to go in the wings, like I'm recommending here, that's like having your very own gas station. You can pull up anytime you want, 24/7, and you've got the fuel that you need to keep your real estate vehicle going. So that's the analogy I like to use. And again, it's all about, you talk about find a good deal and the money will find you. That hasn't been my case unless you've done this. Now, here's the ideal situation. You've got your investors lined up ready to go in the wings. Then you go find the good deal. And then you say, hey guys, here's what I've got. First come, first serve, right? You get first dibs on this. The people who put up their hands the first get it first. And that's the ideal situation to be in instead of desperately, creepily chasing after people and their money.
No, no, it makes a lot of sense. And I think the other thing that I've seen in talking with other guests and just other investors is that once you raise that capital, when you return capital, the investors are typically looking, if they've had a good experience, for your next deal.
Yeah.
And I've seen the people be able to, get into multiple properties based on those initial raises over time there. So that's all good.
Between repeat business and referrals and all that kind of stuff, that's actually step number 5 of my process. But yeah, it plays a huge, huge role. That's for sure. So we've got our target group of prospective investors. We've broken the ice with them. We want to make sure we've got our investor presentation ready to go. And what I mean for that, for most people, what I found the best thing is to have a slideshow, like a PowerPoint or a keynote presentation, something you can show people, especially these days with the whole COVID thing going on, so that you can, jump on Zoom like we are and share your screen and walk people through a well-structured, well-organized, logical presentation that shows them what you're up to, right? And then the goal of the presentation isn't to get somebody to cut you a check for 100 grand necessarily. The goal of the presentation is to get them to say, yes, when you've got a deal, I want first dibs. I want to be taken into consideration. That's how we get our investors lined up, ready to go on the wings. And then this way, capital raising doesn't need to be a sporadic thing. You don't have to be waiting until you've got a deal to start raising capital. In fact, that's the worst time. You start raising capital now, and then you go find the deals knowing that you've got the investors ready to go in the wings. So step number 3 of the process is marketing, what I call constant, consistent communication. You want to be coming out on a regular basis, rock bottom minimum, absolute minimum, once a month. You need to be communicating with your list of prospective investors. That's the absolute minimum. Get up to the point where you can be communicating once a week. That would be pretty good. You could even do more often than that, but shoot for at least once a week eventually, but start with once a month. Find something that you at least don't mind doing. Most people are not, I'm a real estate weirdo and I'm a marketing weirdo. I like both things, right? But most real estate entrepreneurs are not marketers by choice. So pick something that you enjoy doing, whether that's writing, if you want to do electronic newsletters, could be blog posts, could be video logs, vlogs, short 3 to 5 minute little videos, whatever it is, pick something and do it consistently. So that's that, and have it come out on a regular basis. And then the other thing about consistency is focus on one thing. So most of your listeners, most of your viewers are into multifamily investing. So if you're going to be talking about real estate, talk about the big benefits of multifamily or commercial real estate investing. Talk about the big benefits of the market or the markets that you focus on. Talk about the profit centers that are available. But always keep in mind, this is important, Darren, always keep in mind that your prospective investors are probably not real estate enthusiasts like we are, right? They are regular people. And the stats I've seen is 95% of the general population has never purchased a revenue property. So you always have to keep that in mind. The majority of your investors or prospective investors are not real estate weirdos like us. And I say that with love and affection. You know what I mean, right? So keep your marketing pretty high level, make it edutaining, a little bit educational, and hopefully a little bit entertaining as well. What they want to know is that you know your stuff. So don't overwhelm them with data. Don't overwhelm them with charts. Don't overwhelm them with graphs, all this kind of stuff. Keep it big picture. Make sure they understand that you know the details, but keep it very, very Reader's Digest level for them. So Darren, I don't know if you remember the old magazine Reader's Digest from back in the day, right? It was a magazine written for adults, right? But it was written at a level where any 13-year-old kid could easily comprehend everything in that magazine. Same idea with our marketing. Keep it at a level where any average 13-year-old kid can get it, and you know you're right on target. Doesn't mean that your prospective investors are dumb, not at all. It just means we want to keep it, pretty light and pretty easy to understand and consume. Does that make sense?
Yeah, no, that's definitely something to keep in mind. I know it's really easy when you're constantly talking with other real estate investors to get into the weeds and that. But I thought that was interesting, that stat you said. Was it 95% of people have never
Of the general
purchased?
population, population has never purchased an investment property. Their own house does not count.
Yeah,
Right?
a revenue generating property. I mean, that right there to me is one of the key. I mean, that's so critical to the whole understanding of the value of the real estate opportunity. Because I think most people, when they do walk into a house, they think about living there, and they think about having the party, or whatever, the Christmas or whatever. There's that image as opposed to the economic opportunity there. So that's good.
Exactly. So that is step number 3. That's all about that constant, consistent communication, the marketing. Step number 4 is really important. This is all about the trust factor, right? Because we talked about this earlier. For somebody to invest 100 grand with you, they need to know you, like you, and trust you with their money. So the good thing is, if you follow this process, 2 out of the 3 are already taken care of. They already know you, they already like you. Now we got to work on that trust factor. And the marketing will help with a lot of that. But there's also other ways. And again, here's the cool thing. We need to be able to step into our position as a real estate professional. And a lot of people are freaked out about this, and they say, I'm not worthy, I'm not ready, I don't have enough deals under my belt. Well, remember that 95% of the non-real estate people have never, ever purchased a revenue property. If you even got one deal under your belt, you're ahead of 95% of the general population. So the other thing you need to remember is, we're not trying to make you a real estate expert in the eyes of the entire world. That's not necessary. You're not going to go head to head against Robert Kiyosaki and Rich Dad Poor Dad or anything like that. What we want to do is we want to make you seen as a real estate professional and expert in the eyes of your list of prospective investors, those 200 people. All right. So there's all sorts of different ways you can do that. Getting interviewed on a podcast is an amazing way to do it. Interviewing people on a podcast, another great way to do it. Even just some simple stuff. Dress the part. If you're meeting with somebody and talking about their money, dress up a little bit. Guys, put on a blazer. Show them some respect. It'll get you respect back as well. Be able to speak knowledgeably and simply about your real estate investing strategy, whatever your main focus is, and your market. Be able to explain it, again, Reader's Digest level. And have good-looking, sharp materials. One of my pet peeves, Darren, is so-called professional real estate investors with crappy business cards, crappy little things they printed out at home. right? On inkjet or whatever. Invest a few bucks in some really sharp looking business cards. Invest a few bucks in getting some professional headshots taken and use those in your presentation, use those on your website. Have a good looking website. All of these things help a lot to creating that trust factor and being seen as a credible authority in the eyes of your prospective investors.
Got it. So we've got through four. I mean, we're building the trust.
Yeah.
And did I hear you say number 5 was the
5 is start the snowball effect. And you being in business for yourself, you understand this. Most mom and pop real estate entrepreneurs don't. But once you get an investor on board, do the absolute best job you possibly can for them. Make them, under promise, over deliver. We always hear that, but do it, right? Under promise, over deliver, make them ecstatic. They're going to reinvest with you. And if you do it right, you can get very effective testimonials and you can get warm referrals to their friends and their family because they hang out with other people with money too. So do a good job for them, and that can help you just expand your sphere exponentially. And that's it. That's the 5-step process there, my friend.
No, it sounds so simple, but it's the execution there, and I think it's I think we fundamentally, I think at a base level understand all of that, but actually the doing it, and also I think that what's key that I just heard there was about the communication and the level of the communication. I think so often that it's kind of a challenge to try and demonstrate how much you know. So you start laying down a bunch of lingo and stuff, and it just kind of goes whoosh, right past them. And
that's exactly right. Bless his soul, my big brother Dan is a very analytical kind of guy. Way, numbers way smarter than I am. But the challenge is when he talks to a normal person and he throws all this data at them, their eyes glaze over, they roll in the back of their head, they get confused, and a confused mind always says no, right? So he struggled. He struggled with trying to raise money because he overwhelmed people with too much information. So it's always keep that in mind, right? They want to know that you know your stuff. They don't want to know everything you know. And at the end of the day, Darren, this resonated with me. At the end of the day, your investors are really investing in you. And the actual deal is just the security for their money. They're really investing in you. The property itself is just the collateral. All right. That's something took a while for that to sink in for me.
Well, that's good. That's really good. Hey, Dave, if we could, I'd like to shift gears here for a second.
Sure.
By day, I'm an insurance broker, and I work with my clients to assess risk and determine what to do about the risk. And there's 3 strategies we typically consider. We look to see if we can avoid the risk as a first option. If that doesn't work, we look to see if we can minimize the risk. And if we find out that we can't avoid nor minimize the risk, then we look to see if we can transfer the risk. And that's what an insurance policy is. It's a risk transfer risk strategy.
Well put.
And,
Yeah.
risk management strategy. And I like to ask my guests if they can take a look at their own situation, whether it be their clients, investors, tenants, the market, however, they can identify the situation and identify what they consider to be the biggest risk. And just for clarification, I'm not necessarily looking for an insurance related answer. But if you're willing, I'd like to ask you, Dave Dubeau, what is the biggest risk?
Well, do you mind if I give you 2 answers?
No, we
Well,
welcome.
so the biggest risk is staying stuck. That's the biggest risk, right? Just trying to self-finance your deals and not growing your portfolio. Because then you're not going to achieve what you wanted to out of real estate in the first place. Okay, so beyond the hooty fluty woo woo kind of big risk, the tangible risk, the biggest tangible risk I see with people when it comes to raising capital is crossing the line with the Securities and Exchange Commission or your local authority. I see people making this mistake a lot, and sometimes they get away with it for a while, but eventually it catches up with them. and it can cause a whole world of hurt and expense that you don't want to go through. So the process I've walked through here today is a very good one. And I also highly recommend talk to a real estate lawyer in your area, explain what you want to do and see what you need to have set up to do it properly. Maybe you don't need anything. If you're bringing somebody on board as not only a money partner, but actually a joint venture partner in a deal, you might not need to do anything because they're an equity partner and they're actively involved, not just with money, but they're actually doing something. So you might be exempt that way. But make sure that however it is that you're bringing your investor partners on board, you are compliant and you're not crossing the line with the Securities Commission.
No, those are words of wisdom that I think any investor looking to raise capital should pay heed. You certainly wouldn't want to be that guy that you know crossed that line and ended up having all sorts of additional problems. Um, Dave, where can the listeners go if they would like to learn more or connect with you?
Well, thanks, Darren. So basically, my main business is I have a boutique marketing agency. And everything I just talked to you guys about today, we help our clients actually implement everything that we've been talking about. So the best first step would be for you to get a complimentary copy of my book called The Money Partner Formula. I'll trade it to you. I'll trade you a PDF of my book in exchange for your name and your email address. And that's how we can get connected. And the way you can get the book is at investorattractionbook.com. Darren, I have spared no time or expense at putting this sign together for you and your listeners. There you go. Investorattractionbook.com. That's where you can get a copy of the book, and that goes much more in depth into everything we talked about here today. And then you'll be in the loop. And if you'd like to attend one of our full day workshops where we really roll up our sleeves and dive into this, that would be great. And if eventually you decide that you'd like to work with us as a client, we'd love that as well.
Awesome. Dave, I can't say thanks enough for taking the time today. I've enjoyed our talk. I've learned a lot, and hope we can do it again soon.
My pleasure. Thank you very much, Darren. Keep doing what you're doing.
All right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CRE PN Radio.